Good morning, all, and welcome to this morning's video. Happy Easter to those of you who celebrate it, and happy holidays to those of you that don't. So, I have two pairs on watch today, and those are pound dollar and pound CAD. Once again, I'm not anticipating necessarily either of these pairs to provide an entry today, but as I said previously, we never know what's going to happen in trading, so it's not for us to say what the market will and won't do. It's just for us to show up and be ready to execute if the market provides an entry. And basically, I'm also just trying to keep in the practice of good habits. So even though I don't necessarily think these entries are likely to shape up, it's a good thing to do to keep in the practice of good habits as much as possible, so that when the market reconvenes, once the volume starts to come in again, you're not kind of floundering around and feeling like you're out of sorts. The more success, in my experience, is all about repetition. I mentioned in a webinar, I'm part of the Falcon Trading Guidance community. If you're not a member of it yourself, just to give that a little plug. And one of the things I mentioned as a student, as a viewer of one of the webinars recently, I mentioned how I set daily goals, as we all do in that community. I set daily goals, and I haven't missed, I haven't failed to tick off a daily goal since the end of July 2022. So I've been setting goals every week, almost every day of the week for the entirety of that period, and I haven't failed to tick off a single daily goal, right? By coincidence, my success from a monetary perspective came in 2 years ago as well. So just before that, May 2022, I started to make a decent amount of money, and that has continued throughout. So I think there's a correlation there between success, in quotation marks, however you determine success, and consistency. So that's another reason why that's a good example of being consistent. Being a consistent person will bring in consistent results in whatever endeavor it is you're trying to attain consistent results in. But without further ado, let's break down these pairs. So pound dollar, let's break these pairs down. So from top to bottom, not this is not down analysis like you'll see on many platforms amongst the inconsistent. Another trademark of consistent people, certainly where trading is concerned, is they do top-down analysis, even if they're scalping. I'm sure, I can assure you that people who are scalping professionally are aware of the higher time frame direction. So we have this structure here. We have this 1, 2, 3. I'm seeing this as a middle section within this piece of structure. And then we have this near miss here. So that gives me a clue. Once I see this structure like this and we break below, this will likely just blast to the upside, because if we just scroll left, there's nothing below. Okay, so this just gives me an indication that this is a bargain area of value for a buy for the bigger players, and that at some point we will likely take out this near miss to here. Okay, when we have these near misses, usually the high, if prices potentially moving to the upside, if we have a near miss to the upside, usually this high will be taken out if price near missed to it last time around. Okay, so notice that if you watch my videos on a regular basis, you'll notice that the thought process is practically identical each time. And that's another way that you'll get consistent results, as if you keep your thought processes consistent. So here you can see where people thought this was a retest to go short. But as I said, if we're going short, where are we going short to? Okay, you could say, oh, well, we're coming back down to here. Well, we could be, but you don't normally see a sharp move up followed by a sharp move down followed by a sharp move up. That's not typically how the market moves. The market tends to move by way of impulses and corrections. So if we see an impulsive move up, it's more likely that we'll get a correction to move to the upside. Okay, and in this instance, you can see that we have this kind of running channel. Okay, so we have the impulse running channel continuation. Okay, that's typically how the market moves. So at this moment in time, we don't need to come back down to here, because we've washed out all of the liquidity that was there. So that kind of adds fuel to the theory that we may be coming to the upside at some stage to take out this high, which this high near missed too. Okay, we have another impulse and correction. So we have this, if we can get the paintbrush tool on, there we go. We have this impulse correction continuation. So we have a completed structure here, okay? So we have the 1, 2, 3 wave move within that, and then we move to the upside again. I am aware that we have a bit of a near miss to here. So at some point, this low may be taken out because we have a near miss to it. Okay, but that doesn't mean to say that it will necessarily be taken out straight away. We also have this impulse correction potential continuation to take out this high, and then who knows, if we were to complete that, then maybe we would be coming down to here to take out this low, this low near miss 2, which would give us more of that structure. Okay, and then maybe we'd get a bounce from there. Okay, but that would look very wide relative to this move up, which has preceded it. So if that was to occur, we may be dropping out at that stage back down to the bottom. This is all just thought processes. These are thought processes that go on in my mind as I'm breaking down these, breaking down my pairs. One thing that is crystal clear though is that we have this impulse correction potential continuation to push higher, and if we just measure the legs, because the continuation leg tends to be of a similar length to the impulse which has preceded it, that would actually take us up to these areas, which conveniently lines up with, just to touch on it, this sharp move here. When a move is sharp, that often implies that there's liquidity there, and then we would have something like that, and then we would have taken out this high, which this high near missed to, and then we would have kind of this structure, okay? So there's that to factor in as well. And if we just zoom in, okay, so if I just zoom in a little bit, you can also see, excuse me, I forgot to put my glass of water next to my desk this morning. So I have actually drunk a pint of water this morning. That's one thing I do in the morning to keep my brain hydrated, but I forgot to bring a glass up with me to my office, but that's another story. So we have this impulse correction continuation. We break the high, catch people the wrong side of the market, bargain area of value for a sell on the flip side. And I'm just seeing this as a potential move down to here to take out this low, which this low near missed to, before then that continuation move to the upside to take out those highs up there, the highs that I was speaking about. So that means that we could potentially capitalize on a move down to here to this low to take out this low, which this low near missed to. Okay, you can see once again we have the impulse correction potential continuation. Okay, and if I just zoom in a little bit more, you can see that we have, what do we have up here? Shock horror, we have a near miss to this high where there was a excuse me, there was a sharp move. So we have a sharp move up followed by a sharp move down, okay? Giving me a clue that this is a bit of a FOMO move and that people are being trapped in to the sells too early, okay? When price typically moves like this, it's usually because people are trying to sell it, whilst the orders that are still up above are dragging price back up, and that will likely take out that high, particularly when it's the kind of the retest at the back end of all of this volume for then that move to the downside. And if we just measure the impulse which has preceded this corrective price action, and we assume that the leg out of it would be of a similar length, by what do you know, that takes us down to the low or just below the low, which this low near missed to, and that would likely give us that break below, bargain area of value for a buy that we typically see for that move to the upside, and then we would have this more corrective middle section to potentially take us to the upside. So with all of that in mind, what I'll be looking for is the same thing that I was looking for. For last week. So I said to you that I wasn't convinced because it's just basically because it was a bank holiday, and with that, which is the same reason I'm not convinced it will shape up by the end of the day. But as I said, it doesn't matter what we think. When I saw this, when we reacted from this low here, where there was a sharp move down and a sharp move up, which broke above all of these highs, which I said that the liquidity was likely sat there, we reacted from that area. When we started to push down, normally I would be anticipating, something like that to take us up there. But because it was the bank holiday weekend, I thought this would likely just consolidate sideways throughout Easter, which is exactly what's happened. And then potentially on Tuesday, I think this is more likely to give us that up to there. Okay. But you never know what's going to happen in trading. So what I'll be looking for, whether that happens today, tomorrow, or not at all, is I will be looking for a move up to take out this area of value, which this inflection area near miss 2, and then I'll be looking for a break below this area of inflection. Okay, not above it, because this could easily be a retest to go long like that. Okay, I'll be looking for a break back below this area of inflection, and then a 5-minute correction. So 6 to 8 corrective 5-minute candles as a minimum. And if that was to happen, I would get short on the break, and I'll be able to manage it down to here for a first target of something in the region of 5.5. Or if we got 6 to 8 corrective 15-minute candles, then I would look for the same thing, a reduced risk entry on the break. And I would also be looking for the risk entry within the flag if I could get it as a preferred option, because typically speaking, the risk entries within the flag are tighter, the stop loss is tighter, and then my target would be down at that low there, because that would be, if we just measure this, so I would measure from range to range, and the 90% area is typically where price pulls back deeply, even if when it does continue in the forecasted direction. So I would set a take profit at that low, which got close to there and near miss to it, and that would give us something in the region of about 9.5%, depending obviously on the size of the stop loss. So that is pound dollar. Let's move on to pound CAD. So that, in my experience, is a low risk position. Okay, we will be well positioned on all time frames for a move to the downside. The sequence is pretty good. Okay, the sequence on the way down from this area of value is pretty good, with the exception of that sharp pullback there. So it's a pretty decent sequence, not the best, but pretty decent. And then that, in my experience, if we broke above a sharp move, broke above this, and then broke back below both of them, having just retested the back end of all of this volume, that is a low risk position for a move to the downside. Okay, especially after this very aggressive impulse, I would expect that to follow through with a similar level of aggression. So pound CAD is a slightly higher risk position. So my rules state that I wouldn't take a position like this unless I was actually in profit for the month. And since it's the 1st of April, I'm not in profit for the month because I haven't placed any trades yet. So this entry would not be taken unless I was in profit for the month. So pound dollar would actually need to put me in profit for me to be able to take this position. Okay, I need to be in profit by 2% for the month. That is my rules. Okay, and that's basically to protect against. I'm not funded yet. I'm trading my own capital at the minute, but that's basically to protect you from like losing your funding. Okay, so that you don't take higher risk positions and eventually lose your funded account. It's to ensure that you only take lower risk positions when you're not a million miles away from losing your funded account, if you are actually funded, if that makes sense. Okay, so it's the practice, once again, it's the practice of good habits, which is going to stand you in good stead for such times as when you are funded, for example. So on the higher time frames, I'm going to have to speed up ever so slightly, but we have this near miss to here. We come down, we fill the near miss, bargain area of value for a buy. Okay, people, I'm sure, thought this was resistance. Once it broke below, they start selling, and they get washed out by the bigger players who see this as a bargain area of value for a buy. Okay, we then have a near miss to here. That is in my thinking as well, especially since this high caused a very, very aggressive sell-off, implying that there may be a lot of liquidity here. But once again, that doesn't mean to say that we have to tap into that area straight away. Okay, that doesn't mean to say we can't capitalize on a move to the downside in the meantime. If you just look here, you can see that prices followed through with a lot of aggression. Okay, but notice that this move down is slightly more corrective than the move up which has preceded it, giving me a clue that maybe we're heading down to this area to then push back up to then take out this high, which these highs near miss too, which would give us that kind of structure and something more parallel. And then who knows, either we're forming continuation to push higher above there, or maybe we're pushing back to the downside to take out this low, which would give us that 1, 2, 3, and would complete this move. Okay, so these are the thoughts going through my mind when I'm breaking down these pairs. So as I zoom in, you can see, okay, this is giving me more of an indication that we could push higher from here. Okay, because we have that when we see a scoop like that, that is more typical for a move to the upside. Okay, which would then give us that structure that I was talking about, and it would be parallel as well. Okay, so you might be thinking, well, why would you not be looking to get long? The reason that I would not be looking to get long is because if we just zoom in, we're forming if this is a value area to push higher, what we don't normally see an accumulation. We don't normally see an accumulation of volume like this just below the low. Okay, the amount of times in my trading journal I've seen trades that I've taken like years ago, not recently, like that look like that, and you look for flag and you get long, and then you just get tagged in, tagged out, and then just price messes around and forms some kind of reversal structure more like that. Okay, this you don't normally see this much volume below an area of value if price is just going to tap that area and then move to the upside. I can't remember seeing that too many times at all. Okay, so that gives me an indication that this is just volume accumulation to push lower. Okay, and that the higher time frame, this weekly the momentum on the weekly chart, and particularly I meant to touch on it. Look at this on the monthly chart. Look at that very, very bearish monthly close, which closed obviously has literally just closed. When we have a massive wick above above a candle, and the candle is bearish like that, then that is indicative of a lot of liquidity being grabbed for a move to the downside. And I think that would cause a lot of people, a lot of sellers to get out of a lot of buyers to get out of their position. Okay, so that is giving me a clue, especially with all of that volume, that what we're likely doing is dropping out. Okay, what we might likely do is drop out, and then if we did drop out and we formed, this looks even less likely by the end of the day, but if we just dropped out and formed a 1 hour continuation, so if we got a 3-touch 1 hour continuation or a 2-touch 1 hour continuation with a 3-touch structural approach leading up to the first touch, then I would look for a risk entry within the flag as I've drawn it here. Okay, you might be thinking, why would you not take an entry on the break? Well, this far into a run, what can happen is you end up being tagged in, tagged out, and then price forms a larger version of itself, something like that, and then drops. So by taking a risk entry within the correction, you're allowing yourself to manage the position if it reacts from there and starts to form a larger correction like that. Okay, you would be running at 1 or 2% profit, and you'll be able to take the risk off the table. Okay, and then what I would do is I would set a take profit down at this low here. Okay, I would measure from range to range. So the range in this instance would be there to there, and I would set a take profit at the 90% mark, and I would trail my stop loss accordingly. If you look at all this volume here, price would likely consolidate in this area down here for a long period of time, even if it did continue. So that would be where I'll be looking to get out rather than hold through a bunch of mess. Okay, this is a high risk position because if we just analyze this ever so slightly, okay, and because of that scoop as well, one of the questions I asked myself is, if I was to get tagged in and tagged out here and price did that and completed that structure, would that look abnormal? And the answer is no. So therefore, by definition, according to my understanding and rules of the strategy, the rules of the strategy and my understanding of it, that this will be a higher risk position. Okay, so I hope you've enjoyed this video, folks. This is not a signal service if you're watching externally outside of the Falcon community, but I hope it's challenged your perspective a little bit and made many of you see that you don't need a bunch of mess on your chart to make sense of price action if you actually understand the price action in the first place. If you're new to the Falcon community and you're seeing this within our private Discord community, welcome, and I hope you've enjoyed this, and I hope it has helped you as well. Thanks for watching, folks. I will be back tomorrow when the market will almost certainly be a little bit more liquid. But for now, Have a great day, and I'll speak to you again soon. Thanks for watching.